my schedule pretty much worked around what I need to do and what I want to do, primarily what I want to do, who I want to be with, and what times I want to do that. And that's ultimately the best thing about freedom right there. It's not how much money. I mean, at the end of the day, I mean, I'm still probably, am I going out to fancier restaurants? Am I buying bigger cars, bigger houses? No, we don't want a bigger house because like my 2 kids are growing up and leaving. When do I want a bigger house?
Right.
I mean, you can do things with the community. There's things I'm kind of focused on in the second chapter here, but really, it doesn't take a lot to get to there. And when you get there, it's so precious.
I am Christina Suter, and this is the Real Estate Breakthrough Show, where we talk about the reality of real estate, the mindset you need in order to face the reality of what it is, and tips and tricks to get you moving forward in investing. I am your host, Christina Suter. Today, we have a most amazing guest. Now, I have to confess, I will admit to the fact that honestly, I wouldn't invite people to my show if I didn't think that they were really cool, awesome people. Really, guys, those of you who've watched my previous show and followed me previously, you would know that I only try to lead you straight and give you the truth. So David, he is here with me in the studio, and David Thompson, and he has a strong experience in real estate investing in both domestic and international projects covering single family, multifamily, land development, and I suspect a few other things that he hasn't told us about. He earned his MBA in finance from the Thunderbird School of Global Management and graduated summa cum laude, which I obviously didn't because I can't even pronounce it correctly, with a BA degree from Arizona State University. David spent over 20 years in high-tech management positions at Dell, AT&T. At Lucent, he managed a $2.5 billion investment portfolio and raised over $1 billion in funds for acquisitions. After leaving the corporate world, David Thompson, and started investing, which provides investors opportunities to invest with experienced operators in multifamily apartments, self-storage, manufactured home parks. As a general partner and sponsor in syndication deals, he has raised significant private equity capital. He helps provide investor funds to purchase over 4,500 apartment units worth over $400 million. Current strategic partners include Ashcroft Capital, Wildhorn Capital, Reliant Real Estate Management Group, and Crovemark Group. David prides himself on building long-term relationships, which is why, David, I honestly feel so comfortable recommending you, truth be told, because it's not just about, you're really, okay, great. You're a good guy, David, and you're an expert in real estate. That's really great. But it's the long-term integrity that makes such a difference when you're going to hand over $100,000 to a syndicator. Right. That integrity is what allows me to say, listen to David Thompson. So let me finish. In partners with providing great customer experience, David has lived in Austin, Texas for 20 years with his wife and his 2 daughters. Welcome to the show, David.
Thanks, Christina. I'm really excited to be here. Yeah, next time I'll shorten that one. I appreciate it. It's not like I got this big ego. I need to hear it all the time, but no.
No, it's all right.
We got the pleasure of meeting you last summer in Los Angeles. So I was moving my oldest daughter out there to get her first job after college at Disney. And it was a pleasure meeting you. I'm so excited to reconnect and be one of your first guests on the new show format. So that's awesome. You are. I am particularly excited about my Real Estate Breakthrough Show. It's really great because it is going to be on multiple iHeartRadio, iTunes, which we've been on previously, Spotify. The list is too long for me to remember, truth be told. The new fun part is my own channel on Amazon TV. So I'm looking forward to that. I'm not sure exactly what that means yet, but I do know, therefore, it is a requirement that we be on video because of that. Sounds like a Survivor show I have to be a part of.
It might be. I don't know.
Who knows?
It's a little scary. Truth be told.
That's great. All right.
So I've just gone through your bio, but really, honestly, David, I want people to get a chance to know you because why be on my show? Like, why do we want to know about David? So tell us about yourself and what you did before real estate, which also involved raising capital.
Sure. I mean, I had an interest, Christina, in finance and just personal investments and money at an early age. I ended up going to college in one of the first programs in financial planning back at Arizona State University. It was kind of cutting edge at the time, but I just resonated with that. I was trying to figure out what I wanted to do. I'm like, that sounds cool. I didn't know how to manage my own money. So I loved that, but it was a recession when I graduated, and I was like, 22 years old, and I didn't know anybody with money, really. And I was thinking, what am I going to do? And the only job that was out there for me was selling life insurance, and things, and it's an important part of anybody's plan to think about those things. But for a 22-year-old, I was interested in more, fun things like investments and those kind of things. And they said, we don't really pay anybody for that. So I said, okay. So I decided after 6 months of really kind of failing at that and really scaring myself about sales and the whole process, it was just a rude awakening for me. And I said, I just got to shut that down. I'm going to go get my master's in business, international business.
Right. If you can't get a job, what do? We go back to school.
What do we do? We go back to school. I'll go back to school, spend more money, spend more time. But the interesting thing about that is after I got out of school, I was able to get a job in corporate world. It was supply chain, nothing fancy about it, but it was kind of cutting edge too. Now supply chain's huge, right? You mentioned Amazon and what's going on.
Oh yeah.
So I was kind of early into that game, international business. But after about, I just got into this corporate thing, and 20 years later, the kids were getting older. I still had this passion on the side. It wasn't something I never went away. And I think that's maybe my first tip to listeners is you kind of know when, what are you reading outside of when someone's not telling you to do something? What are you doing, Right. And I look around my house, I got all these investment things. And I'm like, I still like this. And I know I'm doing it for myself right now, but, people would come to me for thoughts, family members or, hey, you sound like you know about this or know about that. And so when the kids got a little older, I was like, hey, we've done well. I want to take a break and kind of do something a little bit entrepreneurial, something around real estate. Because we had been investing in single family homes in the Austin area since about 2012. Things were going pretty well 3 years into it. But one thing that dawned on me was like, hey, I still have to have a job. I still have to have a W-2 to get a loan. And this is going to be a slow process. This might take another, I got to stay at the job another year, save a little bit more. The houses are getting more expensive. Got to save more. I can't buy 10 houses. Maybe I can just buy one. So it was just becoming a slow process. Enter another management regime that just didn't fit well with me. You need all these catalysts around yourself, a reason why, you need a reason why to leave. And it was a perfect timing in my life to go do something else. And I just happened to meet somebody who was doing something in real estate that really intrigued me. I didn't know a lot about, and I was just online, searching around for real estate and things, and ran across this topic of syndication, which is, hey, wow, I don't need
randomly online. You said let's start with syndications. I mean, I actually
went into a real estate network, social media networking site called Bigger Pockets. That's how I kind of started.
Sure.
Just all these different forums about learning. I didn't know at the time it was syndication, but I stumbled into this commercial real estate one about apartments, and I happened to run across someone that was kind of a lot younger than me, like buying 300 unit apartments, $20 million. I'm like, okay, no, how do they do that? Unless he
that's funny.
Came from a wealthy family. And I kept seeing more of those types of people. I'm like, okay, so there's got to be a process to this. And then, with a little study, fast forward, I joined a program, kind of a mentoring program with this guy. And then about 3 months into it, I'm like, he's teaching me how to buy my own apartment, but that's a complex thing, right? It's a little bit, it's a big team sport. You need partners and all this kind of stuff. And I said, I thought the best way for me was to just join the experts. Just join them. Just, hey, what can I do? What role can I do on your team? And just.
I've been investing for 30 years, and I'm thinking just joining the experts is a really good idea. I'm considered an expert in my field.
That's right.
And I've owned apartment buildings, and I've worked on apartment, and I still am like, maybe I should just join them.
Yeah.
Let the young punks do all the hard work.
Well, I mean, 30 syndication deals later in a matter of 4 years is where I am today. And it all started from that, asking that person, hey, is there something I can do to help you?
Okay.
I don't need an income. I don't need anything. I just want to learn more. He stuck me on part of the role on the team, which was, hey, you need to learn how to raise capital and talk to investors for your own deals. So why don't you just do it for us?
It's a great way to start.
You got a good program. Why don't I introduce? So I started with just friends and family, just like almost like network marketing. Just start with people that I felt were sophisticated and have a level of experience and some money to do this. And then now it's 400 investors later. So that just kind of came through referrals and things were going well. But I never, I was looking back on this. I was thinking, okay, financial planning. I never really got too far away from that. I wanted to learn how to understand investments and share those ideas. The second thing, I bartended my way through college. I didn't come out with any student debt, thank goodness, but I spent too much time in college because it was all my friends were hanging around the bars. But it was fun. I learned how to relate to people and talk to people in maybe a little bit more of extroverted fashion. And so I married this financial interest and passion about and something natural talking to people. So I'm really, you would probably consider kind of a focused on educating investors and bringing capital into our larger deals. And that's what I do. And I just took that and exploded it into different operators and different niches and things like that. So I don't know. We can take some of those things apart or go into a different channel.
Well,
but,
no, it's totally good. Well, here you touched on it just for a moment. I mean, yeah, you've always been involved in finance. Clearly, that's always been an interest to you, right? You started out in more traditional job world, JOB, right? I was sitting around a table one time and somebody said, so what's your JOB? And I went, what's a JOB? They said a job. And I went, oh, right, job. I hear people have those, right?
Yeah, right.
Because I've been an entrepreneur for as long as I've known. So I rarely have held a traditional job, but you started in that world. And so part of the focus of this particular show is, what is it that was your incentive inside of you to go from the JOB to something where you had more control over your time, whether it was to expand your own investment portfolio and or to take a job inside of real estate that allowed you to get closer to being financially free? Why bother doing that? Why leave the JOB?
I mean, I had run its course, really, right? 20 years. That's a long run. And I was in a management. I was a director at these companies. I was in a nice position. I could have just stayed there and hung out in there 10 years. I think the catalyst I mentioned earlier was, I had a management team come in that was really focused on kind of, I would say, a micromanagement style. And I had my kind of group over here. Things are going great. I was traveling international. Business was going well. I don't rock the boat. And I'm like, I think they're just doing this kind of like they need a whole new regime. And I kind of felt that if I stayed longer, I was going to be more miserable and probably led to, me being so upset. I was either going to leave or they're going to fire me, whoever comes first, right? So that was one of the major catalysts. The second thing is, fortunately, because of the financial planning background, my wife and I were pretty good savers and investors over our lifetime, and I had good roles. So I had the luxury of leaving and exploring. And, my wife kind of was like, okay, how about like kind of 12 to 18 months? That was kind of the program. Like, that was kind of the understanding. Like, I'll let you do this thing over here on real estate.
For this period.
Yeah, for this kind of, we can't just kind of do this forever. You can't find you on the beach just, not doing anything and just researching real estate. So, it has to have some kind of thing going on here. And of course, she bought into it as soon as, we did our first deal. And it did come with some compensation, which wasn't really what I was going into in the first place. It was kind of learning and mentoring, but the business of commercial real estate can be lucrative. And that definitely kept me in the game once I started going, because I realized ultimately I was loving what I was doing, Christina, and I was experimenting with that and seeing if that would I do it. But you hear it all the time. If you're like a kid in a candy store and they're pulling you out of there, that's kind of what my wife has to do. I don't work crazy hours. I work longer hours actually than I think I ever did in my life, but I don't feel like it's work, right? I don't feel like it's work. So I'm like, if you're doing something fun, I mean, let's keep it rolling, So
it sounds like really the transition was as much about, the job itself had burned out. Really, I mean, I think it's 80% of the reason why people leave their workplace is because they're immediate superior. Right. So it's like, no, I'm not going to be able to enjoy my job anymore. This new management company, this new culture is going to drive me crazy, and I'm going to do things I'm going to be locked up for if I go any longer here. Maybe not. Okay. Maybe I'm a little extreme, but but basically it was like, you were fed up, you were ready to move on, and you happened to move over into finance. You happened to move over because you were already there into real estate, and took this 12 to 18 months to say, hey, what am I going to do? By the way, my husband's had the same conversation with me about like, okay, only for so long, sweetheart. And then you need to bring money into the household again. Okay.
Let's put some guardrails around this thing. Yeah,
exactly. But basically it wasn't so much just a drive for financial freedom, because you already had some of that. It sounds like it was more of a drive for freedom to do something that you actually enjoy doing for long hours of time. And real estate hit that for you for whatever reason, right? It touched that button, right? To say, yes, I want to do real estate for 16 hours a day. Or like my husband teases me, he always says, if I hear the word real estate in the room, I'll be like, I'll be right back. And he's like, no, you won't. No, you won't. I'll see you.
We had to start putting limits on my calls, because it would be like, I have my schedule, my calendars, people can pull it up and book 30 minutes. And you would think that would be sufficient, but sometimes I just start getting going, and if it's a new investor, especially, you got a lot more to cover. And, I'll routinely go 45 minutes, or sometimes an hour. My wife, she starts putting the clock on the stove on like 30 minutes. When this thing goes off, you wrap it up, because she was kind of helping
We're not
me
waiting
to
on
be
you
more
anymore.
efficient. Yeah, you can have so much fun. I mean, at some
Right.
point you got to kind of get to the chase, but I think that was a catalyst. But you touched on freedom. There is nothing. I mean, I tell you, the business is going well, and I'm sure if you have a business that you're entrepreneurial in, it's not going well, it could be a sure hell. But
Yeah, I can.
when it's going well, the control of your time and who you want to be with. I'm being with you today, Christina, because I want to. Right? I go to meetings at 10 a.m. or 2 p.m. for coffees or maybe a lunch now and then. I avoid Austin traffic. The other day I had to go somewhere. My daughter had something. I had to take her somewhere. I'm like, I can't believe you're in this traffic. And it was like 45 minutes to go with the Burger Flies about 2 miles. And I was like, I don't know how I used to do this. I don't know how to do this.
Right.
So I can work out of the house. We can go anywhere. I was in Abu Dhabi this year, Iceland. I was in Australia last December. I was in Japan. And I can do my business, and I can just kind of get up in the morning, kind of check some things. If something urgent, I can still get my text most places except China. That's it, And so I tell my wife, I'm like, man, nothing's stopping us. My daughter has a swim meet. I never miss anything. I can go. I work. My schedule pretty much worked around what I need to do and what I want to do. Primarily what I want to do, who I want to be with, and what times I want to do that. And that's ultimately the best thing about freedom right there. It's not how much money. I mean, at the end of the day, I'm still probably, am I going out to fancier restaurants? Am I buying bigger cars, bigger houses? No, we don't want a bigger house because like my 2 kids are growing up and leaving. When do I want a bigger house?
Right.
I mean, you can do things with the community. There's things I'm kind of focused on in the second chapter here, but really, it doesn't take a lot to get to there. And when you get there, it's so precious. You don't realize it. You were saying, well, what's the job? What's the catalyst? If more people knew what it feels like to be in this role, unfortunately, our unemployment rate would go way up, I think, for a while. Everybody got found out what they wanted to do.
What they wanted to do. Yeah, I think you're right. I think if people understood there's a choice. Like this, I mean, yes, you have to work really hard. The truth of real estate, any entrepreneur, is that you have to work really hard, just as hard as if you were in a W-2. There's no question about it.
Right.
But you like doing it. You like show up for it. And you're like excited. I was invited to talk at a club on the eve of my birthday, and when I was walking in, I told some random, in person at the meeting. I don't mean to discount them in any way, shape, or form, but I mentioned it to somebody who was saying, "Oh, you're talking tonight. That's really great." I said, "Yeah," and it kind of walked over to, "And tonight's my birthday." I'm like, "What are you doing talking on the night of your birthday?" And I said, what better thing to do than talk on the night of my birthday? Right. I love speaking. I love being engaged. I love making a difference.
Yeah.
I get to do that on my birthday. Yeah, that's the best birthday present ever for me.
Doing what you're doing.
To do what I love to do.
Yeah.
And to touch other people with it is exactly what birthday present I would want to have.
Sure.
But I'm just weird that way. I'm really, really weird. I'm not a person who avoids or feels that my work hours should be limited. Yeah. But again, I've been an entrepreneur all my life.
Yeah.
I've known that freedom all my life. So we'll backtrack just a moment. Thank you for answering the implied question, which is why care about financial freedom? Like, what does it bring you? Why even do that? And I am going to double back to you're in your second stage of your life, because that speaks of you transitioning into something. So I'm going to go back to that too. But let me stay with my format for a minute. What do you and your quote unquote company specialize in? And why is that niche so successful? I mean, we touched a little bit on it already, but go a little deeper in that.
No, it's commercial real estate and it's passive investing. So we really focus on educating investors who are new to this space. Typical husband and wife, both working, making good incomes, family. They know real estate's important in the portfolio. They don't have the time. They don't have the time. And they need experts to show them what's the best areas of commercial real estate. And certainly people get experience usually as buying a single family home and maybe being an accidental landlord or doing it for a couple of houses. And I talk to a lot of couples who are like, man, we don't want to do that anymore. And I'm like, hey, that's fine.
Toilets,
some people,
trash, teenagers.
How about if you can get the kind of same kind of stuff, but at a bigger scale, like apartments, self-storage, mobile home parks. And we have professional managers and we get reports to you and money goes into your account. Most of these things cash flow pretty regularly, so they like a little passive income, and it's kind of a total return concept. You don't have to just buy something and wait 5 years to sell, like a stock, and worry about when to sell it. This is like, it's producing some income along the way, so it lowers people's risk. If you look at what got me excited about it when I started doing research, and I have a book on this, and we just updated the data through 2019 because it all came out. But if you look at stocks, S&P 500, self-storage, mobile home parks, and apartments, those three, apartments, self-storage, mobile home parks, have outdistanced in the last 25 years 2x the stock market, and far less volatility. Yes. And I think it's because of the volatility, because they're really good in downside. So if stuff goes to heck in a handbasket, we know that we're not going to sell in a downturn. Or at least with hope we're positioned well not to sell in a downturn. Right. We may cash flow less, of course. We're not raising rents during that time, but 2 or 3 years later, you get out of that. Where stocks, you're down 50%, and what people like to do is sell. They get nervous, and everybody does, and we sell at the wrong times, and it takes a long time to recover. A 50% downturn, 100% to return to get back to even, right? So that got me focused on those three categories. And then I just expanded it. I found a couple peers out there who were doing this long before I got involved with it, and said, Dave, here's what we do. Our model is like this. We really focus not only on some different niches like that, but how about different geographies? Hey, and how about some different operators? We don't want Barry Madoff scenarios anymore. Even though you love all your operators, you vetted them, and it's great, but just, hey, who knows? And also geographies, weather issues we could have economic issues in a particular state. We're already seeing maybe some rent control stuff going on the West Coast. So you just don't want to have all your eggs in one basket. So that's all we've done, is kind of expanded that. But my big mantra is geographic niche and operator diversification. And we just provide opportunities, educate investors, get them in the deal, and then we have a portal and to monitor things, give them reports, and make it as easy for them as possible. That's it.
Now, you really spend a lot of time. I mean, you work with, I think, 4 primary, at least you listed 4 in your bio. You listed 4 primary syndication companies that you either raise capital for or you're a partner in.
Yes, a partner in. All of those I'm a partner in. Yes.
Okay, you're a partner in. Yeah. And you're very specific. Like, let's be, when I said I invited David Thompson to my show, it's because we trust your integrity. It's because you're very specific about what companies you've chosen to work with, or partners to partner with. There are, people don't know this, but there are probably hundreds, literally hundreds of syndicators out there, people trying to raise money, calling a syndication, some highly professional, some not. What is it that you really look for? Why is it that David's particular partners are the best partners that you can stand behind and recommend without having any hesitation about?
Sure. That's a great question. In fact, that was asked of me in one of the multifamily meetup groups I went to locally. And I said, I'll write a blog on that. And then it became a special report. And then it was peer reviewed. People said, that's really good stuff. It was like 10 tips to vetting a sponsor. Right. 10 tips. And it's a kaleidoscope of things that you can do. Not one thing is going to guarantee a good operator. And even if you did all 10 of them, it's not going to guarantee a great operator. Right? I mean, firstly, you can look at track record. You're going to want to interview the people top to bottom. You're going to want to look at their website. You'd be surprised how many people you can knock out of the box kind of going to the website. It looks sloppy. I don't even know what the heck you're doing. You got this little dinky house over here. You're calling yourself a big apartment guy or a lady. You're out. I don't even want to mess with you, right?
It's okay. I don't take it personally. Sorry.
That's right. No, it doesn't matter. There's some great mom and pop operators.
I go to, there's like 1 out of 10 is a girl. The rest of the time, it's all guys. We need more
women. Yeah, we're trying to educate my daughters in this space a little bit there.
I don't care. My mother was an entrepreneur. She was a woman in the engineering field. I mean, come on. She was one of the few women in her room too. So what? Get over it.
That's right. That's right.
All good.
Yeah. Well, I mean, so there's a variety of things, 10 tips. I mean, obviously some of the basic ones.
I interrupted you. I apologize.
Yeah, that's okay. But what I think is the most important thing, this is funny because I just had my investor appreciation event over the fall. We went to rent some really nice place downtown Austin, 35th floor, looking over, and all these investors. And I did a little thing for like 5 minutes. Listen, it's not about me, right? It's really appreciation for you, but I'm just going to say thank you so much and all this kind of stuff. And I said, people say we're really successful. We've been kind of only doing this 4 years, but everything's going really well with us. And my partners, I said, the number one thing that if I'm good at anything, it's choosing partners. And, some of these people, I've been to their weddings, I get them to their family, because at the end of the day, I've always started this business like this, Christina, I'm investing my own money. Every deal I share with my investors. I've walked that property with the operator. I've talked to the broker with this. I've talked to their property manager. We look at the comps. We go around the neighborhood. We look at the data. I bring a third-party underwriter in there to analyze their underwriting to say,
Good.
is some of the assumptions that you're suggesting, is that within reason? Based on your thought about the business plan. So we do take a third-party approach, and the fact that I like about it is I don't have to do any deal. I am a partner with these companies when I do a deal, right? I structure, I'm part of the general partnership and everything. And legally I have to be to do that. I do a variety of roles for the companies, but I'll tell them candidly. I had a call last night with a deal in Austin, and I was telling them we were going over the underwriting, and we're asking these questions. Why are you doing this? Why are you doing that? Okay, great. I take notes. I have it recorded. I put it in my file. I did my due diligence. I don't want anybody to say I never reviewed this deal, right? I happen to love the deal, but I'm never going to show my investors a deal I haven't, really got intimately involved with, because I invest in it. First and foremost, I said, is it a good deal for me? That's how I really look at everything. Is it a good deal for me? And then I stepped back. I said, it was a good deal for my family and friends when I started. And now I have 400 friends and family, kind of thing, kind of the extension of that. But yeah, I love to educate investors on, and I always give them my tips. Like after I talk to my friend, hey, go read these 10 things, because if you don't go with me, I'm okay, as long as you kind of took something from us. Really, I want you to come back, but I want to educate them and never put any pressure on anybody. I'm like, there it is. This is what we do. Here's a particular deal. Here, get educated. I have 50 blogs on my website. I've got 2 books. I've got podcasts. I'll put your interview on my website when we're done. And so people have this collection of stuff. Yeah.
Okay, adjust your mic because we're losing you a little bit.
Oh,
bring it a little closer. Okay, lovely.
Is that better?
No, that's better. Thank you.
Okay,
so you've been involved in this field for a long time, and like you said, you did that paper with 10 tips in it. So It was obviously, you want to do your due diligence on them, but you also talked about how important it is for you and your family to be willing to invest in it.
Sure.
Right? And that these people, you have long-term relationships with these people. So what are a few other tips that are on that list of 10? Not everybody can be you. Not everybody can have a personal long-term relationship with them. Some people have to invest more from a distance.
Sure.
Right? Like me.
Well, I'll tell you, one of the things is, I think everybody has to win on a deal. Okay. So that's like tip 10. Everybody has to win. Investor, of course, wants to win. The general partner wants to win. Okay. We want to make some money in a deal, but it should be back end loaded. Our compensation should be 80% of our compensation should be 2 to 5 years down the road when this thing sells. You don't want to see it the other way around. Hey, Dave's getting this big fat fee up front. And hey, this hopes this goes well. In 2 years, I'm gone anyway. That's not that. It's all about long-term business. It's all about trust. As you mentioned, this whole industry is on trust. 90% of my investors on every deal are going to be return investors or referrals. And that's the beautiful business, right? That would be one. Going to their website, we talked about their, I know when, so I'd look at their underwriting of previous deals. I'll do that one. I'll send previous deals to my analyst, and we'll go through some of their previous deals that they've worked on. We always walk the property and work with them. We've talked about, let's see, going to their website. I do background checks.
I do too.
Yeah, background checks is a good one. Anybody that works with me, actually. I haven't done my wife. I probably should do my wife, but she would love that.
I've done myself. My husband's never done anything wrong. I don't think I can do a background check on him. There'll be nothing.
Yeah.
No, it's like, he's owned 3 cars and he's owned 2 houses and, same job for 4 years.
Yeah. I'll give you one more.
Go ahead,
so
please.
I have an investor here in Austin, and one of my operators does Austin, San Antonio markets. And he said, you know what? I invested in a couple of those deals in San Antonio, and that operator that we're partnering with, I love him because every time I drive by their property and I drive by another property nearby that I'm invested in, it's night and day. Your property, it's always clean, running, he doesn't even have to stop inside the place. He just drives by and can just say it's orderly, it's neat, things are cut, there's trash not laying out. And I share that back with the operator. I'm like, tell the property manager, keep it going, Yeah. So if you put these things together, it's all going to help you build a stronger thought process. Now, once you do a deal with one operator, then it's about communication. I want to see the reports. How frequent they do it, like monthly, quarterly, the quality of the communications. Are they upfront with stuff? It's never going to be linear.
Mhm.
The chart shows it going like this over 5 years, right?
Right,
We're
exactly.
always going to have stuff going like
Yeah,
this.
we're
And,
going to do that. We're going to raise rents by exactly 5.5%
yeah,
every year
right. I
for
mean,
5 years.
everybody would be investing in this stuff. And,
Yeah,
but
right.
I actually coach the partners on this too, because I spend most of my time with the investors. I said, listen, we don't have to say everything. Okay. My investors are in this to be relaxed and passive and have a great experience. So if it's something minor, I don't really want to hear about it. If it becomes persistent, it could be a bigger issue. Let's start talking about it. Like, what are we doing about it? What's the corrective action plan and how are you handling those things? That's as much important. I had one operator when I started, no longer work with them, but they, it reminds me of one other tip, but they just kind of, everything was rosy. Everything was just, I'm like, and then all of a sudden we had a bad, I'm like, well, well, leading up to that, we knew something was going on. So it was
Right.
almost too much. So I want a little bit of balance, right? A little bit of balance.
Mhm.
Here's one thing that's really important to me. I was researching, I wanted a multifamily operator in southeast part of the United States. I didn't have one. We had a gap, a regional gap. And I thought there was some really good markets down there. The operator happened to be in Dallas, close to me, 3-hour drive. I drive there. We have a nice lunch meeting. Everything goes great. And I'm like, I'm starting my vetting process. Like, I'd be interested in looking at your next deal. Maybe we'll do something. On the drive home, no kidding, 2 hours. I'm on like an hour from home. I get this ding on my phone. I look over and I'm like, these guys are sending me a hotel deal in San Antonio. Okay, so two things are wrong there. One, they're multifamily focused. Everything on their website says apartments. Everything they're telling me about is apartments. All of a sudden, they're not singularly focused. Not even 2 hours after our meeting, they're talking to me about hotels in a different part of the country. I'm like, what are you going to talk to me next about? Mobile home parks in Alabama? I don't know. I don't know where you guys are going, but I love working with operators and partners who they're always usually just doing one thing. They may be in 1 or 2 markets, maybe one, but not 5 markets, not 2 different things. And that's really helpful. I want to see a singular of focus. Okay. Sorry. Beat that one up.
No, that's good. No, I think it's particularly important. Like, I made a mistake of investing in a syndication where it was a California operator who had owned single families and smaller multi-units, who was now doing his very first large multi-unit in Arlington, Texas.
Yes.
And I learned that. I mean, that mistake was what he missed was true of Texas.
Yes.
That's what he missed. That's what made the whole deal really complicated all of a sudden.
Right.
Was that if he had been a Texas expert in multifamily, he would not have missed this.
Yes.
This would not have been a problem in the deal. So I agree with you 100%. Like, I really need to see background in that area, in that asset class before I want to hand over my money.
Yes.
So, I was at the Apartment Owners Association. They talked about when you're doing accounting for somebody. Right? He said the way I encourage my clients to think about the house they own or the apartment building they own is you're handing the key over to something that costs like $20,000 to $100,000 a door. Like, when you walk up to a valet and you drive up your $100,000 car to a valet, do you not want them to drive it carefully?
Yes.
Right?
You don't want to hear them racing off.
You want to hear them racing
launch
off.
Control.
You don't want them doing graffiti. You don't want them like leaving trash in the front seat of the car. Yeah. And this is who your tenants are, right? This is who your tenants are in multifamily. So I like that. So let's double back for a minute. I promised I would double back to, you said you in the second half. That means you've transitioned. There's a transition that you've chosen, that you've made. Tell us a little bit about that, because I suspect it relates to financial freedom.
It does. I mean, doing what you want to do. Now, we've been fortunate financially, and things have been going great. And what we were trying to do now is, I'm actually talking to operators, and one particular operator of mine, he focused on the Hispanic market, and he's Hispanic himself. Right. We'll call it workforce apartments, kind of Class C stuff. Okay. But he brings in English-speaking teachers after school. He's got all these different programs going on that really does what? Okay, qualitatively, he's bringing this wonderful experience to the residents, right? Mm-hmm. So I like this kind of win-win thing. We didn't really kind of chance to finish that up, but I do want to come back to that. As the investor has to win, the partner has to win, the community has to win, the community has to win, the resident has to win. If I'm going to upgrade someone's apartment, I can't charge $300 and do a shoddy job, and I wouldn't even want to raise it that much. I would be like raising it a little bit. That makes it like, hey, what's the price that gives you a really good value proposition here? But having these other things that I'm providing to you, like the English-speaking teacher after school or childcare programs or whatever I'm able to provide on that property, that's what he excels at. And what happens is his
Nice.
retention is really high.
Yep.
His turnover is very low, and that adds cost.
Right.
So he's operating these things more efficiently than anybody out there, probably top 1% or 2% in the nation.
Yep.
He's so successful at it. I mean, Disney Family Office tried to buy him out. Goldman Sachs invested with him. I'm very fortunate to be a partner with him. I was introduced to him. He lives in Austin half the year, so we befriended each other. And but what he came to me, we just had lunch on Friday, and he's like, he's here, and we're talking about maybe some future deals. And what we talked about was he's really big on this this social impact.
Mm-hmm. Yeah.
I mean, he's really big on it. And he says, it's just a part of our business model, but it's the right thing to do. And I'm like, that's what I want to be doing more of. I want to be doing more of that.
Yeah.
I finished reading a book, almost done, David Brooks, called The Second Mountain.
Okay.
David Brooks is a writer for Wall Street, a bunch of papers, and really an author and really good thinker. And he's kind of like he's talking to us about, you climb the first mountain, everybody's doing this, but at some point, transition to the second mountain, and he's going to be more interesting to you. You're going to be able to really make a bigger impact, and you're going to really, once you start figuring out what you want to do, it just, and if it can align with what we're doing, that's even better, because I think we can make even a better impact. But if it's something completely unrelated to real estate, fine. I'm starting with something that's right in front of me, because I'm like, man, I spend so much time in this space. How do I just start doing more of that?
Right.
What he does, he says, for his investors, he says, you can make a choice online. Would you like to donate some of your profits to this? Which is actually kind of perpetuates the success of the model. I'm like, that's pretty cool. Can I put your logo on my website, and we can start, I can make a donation directly from Thompson Investing, but what about, how about with the power of my investors? If I have 400 of them, and some of them are coming into your deal, and they see that, hey, it's like social investing, right? I was never a huge focus on that. I was like, if it happened, it happened. But, I was in, like most people are, let's make the best return. But when I started seeing how it all works together, I'm like, that's powerful. If we can get it to work and win-win, then everything I feel like I'm doing is really aligned with my, my thought process and my energy level. It's all aligned,
Okay. So if I may try to sum it up, and I may do a horrible job of that, but I'll try to touch on it. Right? It really sounds like you had the first part of your career, your life, your development as a young, strapping man ready to take on the world.
Yeah.
And it really was about a job and bring, money into the family, maybe providing a good home and a good environment, right? Being a provider in the family.
Right.
Then there's a point where it looks like, because the providing got taken care of, it got finished. You got far enough along, whether that was enough actual equity that grew, or the kids left and you had now a good retirement account, but something allowed you to shift and say, I'm here. I've reached something, some goal, some momentous point in my life. And what's on the backside for me now is win-win community development, being able to make other lives better, because now something has been satisfied, whether it's a financial satisfaction or a climbing a mountain satisfaction, which is very important for men, by the way. I'm going to go totally off the rails here. Are you ready? Okay, completely off the rails.
Here we go.
I talked to young women today, and they're like, oh, my husband's completely involved in his job, and he never pays any attention to us and the kids. And I'm like, but that's his job. You understand? It's not just his job, like that's how he gets paid. It's his job, like that's his job as a young man in the world, is to climb a mountain. That's what he's supposed to do. And if you derail him from doing that, you're derailing him from his life's purpose. So let's give him a little space around that and a little love.
Yeah.
And then when he gets there, what you get on the other side is this amazing gentleman who has proved himself, to his family, as a provider, as whatever it was that his goal was. And now he has the bandwidth to expand and say, how can I make it bigger, better, grander, add more to other people? See, I told you this mic is dangerous. This mic is dangerous.
That was really nice, though. You really added some, you really packaged that up pretty well. And I think, when you're doing, let's go back to it, when you're doing something you love, you think about it a lot, and then you get more efficient. You can scale. It's a phenomenal thing, but you start thinking more about your time. And also, as you get older, you have more limited time, right? I mean, you're getting older.
That's correct. Life is moving on without you.
Yeah, this month I'm going to be going to Denver. My dad's going to be turning 90.
Wow.
He's in good health.
That's great.
But, you know, I'm thinking to myself, you know, you're around people who are older now. As you get older, everybody's getting older, right?
That's
And I
right.
think you start thinking about that too. It's not just a legacy. I mean, I don't think about that, but you know, what are you going to leave your mark here? You know, yeah,
Mhm.
but if you're doing something you enjoy, you're just going to spend more time, and you can just exponentially create more value to yourself, your family, your friends, and you know, really the community. You know, kind of what you're doing out there. So yeah,
Okay.
that's even a more exciting phase, right? I think ultimately.
So do you need to stop in exactly 5 minutes?
I'm good.
Okay. So let me ask you one other trio of questions.
Yeah.
What was your hardest moment in investing? How'd you solve it? And how did it help you grow up?
Yeah, I mean, losing money. I did a bunch of very interesting things, from learning, spending $20,000 to learn how to trade options, and then 6 months into it, at least the minute was good. Trade on paper. I cheated a little bit. Trade on paper until you've won so many in a row. I'm like, after
Right.
6 months and spending $20,000, what was hard to say, I don't have the temperament for it. It's not
Oh,
it's
yeah.
not me. I'm too
Right.
moody. I became too moody. I was like, if I was doing great, great. The next thing, good thing I didn't have a dog around. Like, oh, you know. But I was just like, I really became moody. I
True.
didn't like my
Yep.
temperament. I didn't like my temperament. I didn't care if I would end up being successful at this. It was going to be a train. It was going to be a wild ride to get there all the time. So I learned that. I've also, you know, lost money in international real estate, realizing that, oh my gosh, you know, it's real. Any kind of investing is also, you're adding risk. But what if you add political risk? What if you add currency risk? What if you had uh, the craziest stuff happened to me you would never have thought about? You know, I was traveling down to Brazil a ton of times in the corporate world, setting up projects down there. And this was a year or two before the World Cup and the Olympics. Remember, it was all lining up perfectly. The Brazilian
Right.
economy was on fire.
Right.
China was
Yeah.
buying everything from Brazil.
Yeah.
And then 2 years later, there was a political crisis. There was corruption in the government. The president got thrown out. There was a crisis. Didn't do well. Didn't do well in the World Cup. The currency just took a dive. It
Yeah.
just took a
It did.
dive.
The whole country practically imploded on
The
itself. I mean,
projects I had going on down there went on strike for a whole year. It didn't happen. A strike in the United States for a whole year building a building does not happen. It happened down there. It
right.
was took off. I'm not working. So, you know, that was a lesson in just, you know, understanding just do some research. what can happen? It's always easy to go in there and say, it looks so cool. It's exotic, you know, but I
Mhm.
tell people today, travel, go to, you know, these places, go to Tulum or go to these places and maybe do an Airbnb or do something. If you really like it, go spend a month there
Right.
and get to talk to the locals, really know what's going on about the laws and how things can change. You still may not be comfortable, but to sit on your couch in the United States and foolishly think that reading a magazine, you're going to buy something down there sight unseen, or even if you saw it one time, think like you're an expert, you're going to make 20-30% returns, and then forget about it. Yes, that's a disaster. So anyway, more
So it
conservative.
sounds like you took some good tips and tricks from, you know, like if
Yeah.
you're going to buy internationally, but how did it help you grow up inside too? I mean,
Yeah.
come
I
on,
mean,
it's not easy when your ass gets handed to you. I'm just saying. I
it's
just,
not.
no, it's
It's
not.
not. I mean, I'd keep going at it, but I'd go find something else to do and try to learn something else on. But yeah, I mean, you just as you get older, you just kind of realize that you don't want to lose money. I mean, you know, it's all that Warren Buffett thing. You know, read 1 and 2. You know, the first don't lose money, second time read 1 again. You know, don't lose
That's right.
money. I'm not that conservative, but I really feel that the deals that we're doing, the niches that I'm in, even with my own money, I'm putting so much into real estate now, is I really research the downside of these things, and I really research the partners. And you know, it's not that we won't lose on something. So far, everything is good. It's been an up economy. We'll be tested when things go down. See how this all stuff works. I'm
Mhm.
confident we're in the right markets with the right conservative underwriting and the right deals and the right operators to get through it. But you know, we'll still have to go through that to see how this works. But
Yeah.
you know, I feel like we're just more careful. You're just more careful. There's all sorts of things to invest in. I'll tell you one thing I do, because we raise capital. People send me a lot of deals, and
Yeah.
I just, you know, I said, I don't have time to vet you, your market, or your deal. And I'm nice. I'm just like, you know, come back to me in a couple of years if you're still doing what you're doing. That means you stuck to it, because so many people don't. You know,
That means you did some
I'll never
success.
close the door, but just close it for a
Right.
long time until you go back. No, but I do mentor a lot of people too. I try to give back that way.
Good.
You know, I try to, you know, you just don't want to learn the lesson and not share it. That doesn't make any sense. So I learn a lot of lessons along the way. And I love talking to people about investing. And you know, if they ask me, I'll share my thoughts. They still may do something completely different, but you know, at least you're taking the time to do something you're passionate about and share it back to them. And so my lesson is just, you know, don't go hide and not share stuff that you learn, because that doesn't make any sense either, right?
Okay. So pay it forward.
pay it forward.
Take the lesson and pay it forward.
That's right.
Sounds good. David, you are a wealth of information and knowledge. You have a podcast, you have a website, you have a couple different ways people can learn from you. Here's the time where we want to know all about how we find David Thompson and his information.
Sure.
Website's
the best way. So Thompson Investing, it's a long word, but it's THOMPSON investing.com.
Mm-hmm.
You can leave your information there. You can download my free ebook, Riches and Niches, which talks about these 3 areas and why we like them and how to play them and all about syndication. I also have a book if you're interested in raising capital. I have a book out there called, How I Raised $1 Million in 2 weeks. That's downloadable for free too. And I got lots of blogs, like 50 blogs up there on different topics and some podcasts and things. And then my email is david@thompsoninvesting.com. Great.
Yeah, and you actually have on your website, you have about, the sort of about us, work with us, projects, blog, connect.
Yes.
It's a pretty rich and full website as far as, commercial real estate investing, private equity funds, experienced partners, attractive investor returns. I'm just reading your website is what I'm doing.
Yeah.
Literally reading your website. So
we'll get your picture up there soon.
I'm sorry, what?
We need to get your picture up there, right? There you go. There you go. Anyway, you put the podcast on there. I put a podcast. I do put the podcast interviews on there. So this will go on there so people can see what we talked about.
I see that. And market, you guys, your 2020 outlook for commercial real estate is up there right now. So people can get that financial information and economic information.
Yep.
And, 3 tips for raising capital for your real estate deals. So it's good. There are several different good resources here for people available, like you said, in your books. And it is thompsoninvesting.com. Actually pretty easy, in my opinion. Not a bad website name, thompsoninvesting.com.
It sounds like I have a big ego, but I really don't. I was talking to my mentor and he goes, because he used the same last name, and I was like, that was Joe Fairless. I think we didn't. I don't know if I told him, but I started with Joe, and he's out there in a big way. And
he is out there in a big way.
Fairless. He said Fairless. Fairless Investing. And I always thought it was Fearless. I'm like, oh, Fearless Investing. Okay, Fearless. It's hard to say, but he goes, he had a big marketing and advertising background. He says probably the easiest thing to do is have people remember just by using your name. So that's why I started.
Oh, is that what it is? I didn't know about his marketing advertising background. Obviously, I know about his investments. I know about. I think it's Ashcroft Capital is his.
That's what we started. That's what I started working with. And to this day, we've done lots of deals together. And I'm actually speaking at his event in Denver next month at a big conference in Denver called the Best Ever Real Estate Conference. And I'll be there. And I try to go every year to support him and get to see some of the Ashcroft team. And some of my other partners go there too. Wildhorn and some other folks will be speaking. So great. If you want to go to that, hopefully this recording comes before. I do have a saving coupon, 35% off if you put DAVE 20 or 35. So Dave 35, and you can get 35% off. And I'd love to see you. Yeah.
It'd be great. It'd be great to see you there. And I'm sure that you present at other conferences as well. But
I do. Yeah.
That is nice to know. And I do really encourage you guys to go to thompsoninvesting.com. And you didn't hand out your email, but I know that there's a contact us on your website.
Yeah, David at
Find out a lot more about you and David at thompsoninvesting.com. And there you go. So Thank you so much for being on the Real Estate Breakthrough Show. It's great having you. Thank you for being part of kicking off the new show and the new brand.
Absolutely.
And I really loved having you at my meeting. We talked, even before we started recording, we talked about you coming to the Phoebe Pasadena regular meeting versus the multifamily focused meeting. And we are lining up our speakers. So we'll have further communications about that.
I'll reach out to you. Looking forward to it. All right. Awesome.
Thank you, David.
Thanks for having me. Okay.
Great having you.
Take care. Bye.
Bye.